So hi everyone, when you look at the screen right here, we can see that we have a clear uptrend followed by a downtrend. Right here, we have this clear uptrend followed by this downtrend, okay? And then the market, we don't know where it's going, either in an uptrend or a downtrend. But when you look at the turning points of this market, we can be able to spot something unique. So for example, when you look right here, we got these retracements, okay? So we want to see what caused those retracements within the market, but we can still spot that we got this candlestick pattern because the market is on a clear uptrend. That is number one. And then we get this pattern here whereby this red candle is bigger than this previous blue candle, which shows that that is a bearish engulfing pattern. And then you can see right here, the market also formed this candlestick pattern, this tiny red candle here, but that tiny candle was accompanied by a resistance within the market where we have these two bullish strong candles. But after forming this candlestick pattern right here, we can see that we got here a bearish engulfing, and then the market came to continue in a downtrend. Still, we can see that we got a retracement, though it was small, but after forming this candlestick pattern, we got a clear wave down. So this candlestick pattern is what we call the bearish engulfing pattern. So a bearish engulfing pattern whereby this candle, which is bullish, is accompanied by a bearish candle, and that candle covers its entire body. That is what we call the bearish engulfing pattern. And every time it occurs in the market, we expect that the bears are taking over. So for example, it also happened right here. You can see that the bulls were trying to push the market up, but after this engulfing pattern occurred, the price dropped. So we can see right here at the edge of the screen that we still got this pattern, and we are expecting the market to go down according to what the chart is showing, though there is some little bit of support, and this support will be broken, and then we can be able to catch a new wave down to either this support level. So that is the bearish engulfing pattern, okay? And we are going to be studying it more in this video. So this video is going to be explaining everything you need to know about the bearish engulfing pattern. So when you look at the image on your screen, you can see that a bearish engulfing occurs in an uptrend sometimes, or it occurs in a downtrend sometimes. But what matters most is that the candle which is previous is bullish, but the candle which is coming next is bearish. That is number one. But the bullish candle, its body is covered entirely by this red candle, which is a bearish candle. So you get a bullish candle, but the bearish candle which comes next, its body covers the body of the previous bullish candle, and this is what we call the bearish engulfing pattern, and it shows that the bears have taken control of that market session. So once again, you have a bullish candle, but the bearish candle which comes, its body covers the entire body of the previous bullish candle, okay? So you can look at another image right here. We can see that here the market is in series of an uptrend, but after forming this engulfing pattern, the bearish engulfing pattern, we see that the price reversed to become a downtrend. Okay, so every time we get a bearish engulfing on a clear uptrend, it signifies that the uptrend is weakening, and therefore we expect a reversal or a big retracement within that current trend. Okay. So in the bearish engulfing pattern, the bullish candle is encompassed by the body of the consequent bearish candle that we have explained, and it indicates an increase in activity from bulls and bears, and there is a shift of market sentiment towards bearishness. So what we are saying is that when we get this pattern, so for example, we are on a clear uptrend, okay, and then we get this bullish candle, but the following bearish candle covers its entire body, and this is what we call the bearish engulfing pattern. After getting this bearish engulfing pattern, we are saying that the market sentiment, or where we expect the market to go, is going to change from this bullishness to into a bearish trend. Okay, so it shows that the trend which is in force and that moment was the uptrend has weakened. And then on the other hand, if we are on a series of downtrends, okay, and then on this downtrend we get a clear bullish candle, but again the following candle is a bearish candle which covers its entire body, we expect that the market is going to continue in that trend. So a bearish engulfing pattern can show reversal from uptrend to a downtrend, or it can also show that there is a clear continuation within this downtrend. Okay, so a bearish engulfing pattern is most indicative of onset of a bearish price move, and when it appears in the midst of an uptrend, it shows that the trend is going to reduce in force, or it is going to change. So on this candle, we shall be trying to spot some, shall be able to spot some bearish engulfing patterns. And for example, when you look right here, this is not a bearish engulfing, though some people would argue it to be. Why? Because this blue candle, which is a bullish candle, the body of this bearish candle which came next did not cover its body entirely. So we are saying if you have this bullish candle and then the bearish candle covers its body entirely, that means it is a bearish engulfing. But if you have a big bullish candle, but the body of the next candle, which is bearish, does not cover its entire body, this does not become a bearish engulfing. So when you look right here, where the market turned from to become a downtrend, you can see that the body of this candle here, which is bullish, was entirely covered by the body of the bearish candle, and that is a bearish engulfing. And still, after getting this tiny retracement, 1, 2, 3 candles, we can see that we got a new bearish engulfing, which forced the price to go down once again. So, and still, we can see here that we got a retracement, but after getting this bearish engulfing pattern, the price kept dropping down. Okay, so again, it happens right here. We can see after retracement, it helped us to capture this continuation. And still, again, you can see that right here, this is where the market turned from, but this bullish candle, the body of the bearish candle did not cover it up to around this level, and therefore this was not a bearish engulfing pattern. But still, when you look here, you can see that the body of the red candle covered the body of the blue candle, which is bullish, and then we got this wave down. So that is what we call the bearish engulfing. Okay, so in the previous video, we looked at the opposite of this bearish engulfing, which is the bullish engulfing that you're seeing right here. The body of the blue candle, which is the bullish candle, covers the body of the previous bearish candle, and that is what we call the bullish engulfing pattern, and it shows that the price is going to move high. So the bearish engulfing and bullish engulfing are brothers and sisters. So the opposite of one is the opposite of the other. Okay. So if you didn't watch the video about the bullish engulfing, please go back and watch this video. It is going to be so helpful. You can see that they happen so much in the market. Okay. You can see that they happen so much in the market. So what we want to do right now is to look at where is our entry point when we get a bearish engulfing. So for example, if you look at so sometimes before we go to entry points, we can say that we can get a bearish engulfing, but then the price does not move our way. For example, right here, because these things have to work with confluence, they do not work all the time. Okay, so when you look at the chart right here, we are going to spot and see where can we enter our trend if we get a bearish engulfing. So for example, here the market is showing series of lower highs and lower high pattern, which is a downtrend, and then we can see that right here we have a bearish engulfing pattern, okay, right here. So that means that the price, we are expecting it to drop and also break this previous level of support to continue in the pattern of a clear downtrend, this pattern. Okay, so here we have a bearish engulfing. So our entry point is a few pips away from this bearish engulfing. We don't enter the market price, but we place a sell stop order, and I'll be teaching sell stops later. And then the stop loss is 1.5 of the ATR to avoid these market reflections, which would stop you out. And then you can be able to get this wave down. Okay, so where else can we support? Can we spot this bearish engulfing? So for example, right here, we can see that we have a bearish engulfing. So our entry point was supposed to be below a few pips away from this bearish engulfing, from this candle. Okay, stop loss, and then we can get a wave down. Okay, so thank you so much for watching this video. Do not forget to subscribe to the channel for support and for more videos like this. I'll see you in the next video. My name is Jordan. Bye bye.